Welcome back, and let's now bring you our special segment Finstreet today, where we are going to put the spotlight on commercial vehicle financiers. This sector saw robust growth in Q3 FY23. So Abhishek is here to break down what's really aided the business momentum this time around. Abhishek?
Well, in Finstreet today, I'll be covering commercial vehicle financiers who have reported robust Q3 FY23 business momentum. Disbursals growth on a sequential basis has been anywhere between 8% to 20%, while AUM growth has also been robust, anywhere between 4.8% to 13% for all the lenders. So what has helped the CV sector? Overall, if you take a look from FY17 to 9-month FY23, CV sales have been pretty strong. Blended realization has also improved massively, especially for medium and heavy commercial vehicles. So for example, Ashok Leyland has seen blended realization increase by more than 44% between FY17 to 9-month FY23. The blended realization is a function of price increase as well as tonnage increase. AUM growth trend of all the players. Generally, the growth trend has been on a YOY basis anywhere between 13% to 17%, and on a sequential basis anywhere between 4.8 to 4.9%. However, outstanding growth was seen for Cholamandalam, who has seen YOY growth of more than 31% and 13% on a sequential basis. The growth for Cholamandalam has come in from the fact that their disbursals to AUM ratio has been at 68% when compared to peers having it at less than 28% and around 30%. So good growth also means that net interest margins should have improved, as we know that NBFC lend to high yielding customers on any product. However, Cholamandalam's net interest margin has remained flat despite AUM growth. In a rising interest rate scenario, Cholamandalam's net interest margin has remained flat, while net interest margin has declined for M&M Finance. Cost of funds has impacted the net interest margin momentum of these two companies. If you take a look, their interest income has increased quarter on quarter, both for Chola as well as MMFSL, while their interest expense has grown massively or higher than that compared to peers on a sequential basis. Borrowing mix remains widely distributed for the likes of Shriram Finance as well as Sundaram Finance, while Cholamandalam does not have access to deposit and has one of the lowest securitization portion as a percentage of the borrowings when compared to peers. Another point to note is that Cholamandalam also has the lowest provision coverage ratio when compared to peers. So Shriram has stage 3 coverage ratio of 50.7%, M&M Finance at 59%, while Cholamandalam has it as around 26.7%. Going ahead, lenders like Shriram Finance, Sundaram Finance and M&M Finance can actually raise funds via deposits at attractive rates from their customers. So Cholamandalam's restriction on borrowings profile when compared to diversified profile of peers can actually hurt its growth in the coming period, or let's say in the next 6 months or so, just in case it fails to borrow at competitive rates from the market. Strengthening of balance sheet may actually hurt return ratios for Cholamandalam if at all they choose to do so. Cholamandalam's performance against peers in a rising interest rate scenario needs to be seen with respect to net interest margin as well as return ratios.
Oh, thank you very much, Abhishek. That was very explanatory. With that, it's a wrap on this edition of Trading Hour from the entire team. Thank you for watching.